Welcome back, and it's the much-awaited RBI policy day, and the first of this year is a rate hike on the cards. Let's get Ritu Singh, who's joining us now with the key expectations. Ritu, over to you.
Well, with inflation showing some signs of softening and the US Fed also moderating its pace of hikes, the majority of respondents to our poll expect the MPC to settle for a smaller 25 basis point rate hike this time, with a third of the respondents expecting a status quo. But more importantly, it looks like we're nearing the end of the rate hike cycle, with all respondents expecting no more hikes after February. However, it could be too early to start expecting RBI to start cutting rates, but further rate hikes can be ruled out, which brings us to the peak repo rate. 90% expect the peak repo rate in this cycle to be at 6.5%. Now, on the inflation front, with December CPI cooling off and staying within the target range, 80% of our respondents expect RBI to lower the forecast of 6.7% for this fiscal by 10 to 20 basis points. No change is expected in the growth forecast for the financial year at 6.8%. Now, when it comes to stance, though, experts are divided whether RBI should change it to neutral or persist with withdrawal of accommodation here. 40% of the respondents said they don't expect any change, 20% expect some tweaking in the wording of the stance, but 40% are expecting a shift in the stance to neutral. Now, in terms of other things the markets will watch out for, some are expecting a soft signal about a pause in hikes come April in the governor's statement this time, and also, as has been the case in the last few policies, a continuing dissent on the policy action within the MPC is also something that the markets will keep an eye out for.
Ritu, thank